Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman. I'm here with Garrett Johnston, Senior Vice President at Marsh. Garrett, thanks for being in the studio today.
Great to be here, Tim.
What is Marsh? Many people, I think many people will be like, Garrett seems like a nice guy, but I don't know what Marsh is.
Marsh is, the way I kind of frame it to people is it's the largest global risk management and advisory firm out there. So within Marsh, there are kind of four key segments. There's Marsh. Marsh McLennan is the parent company. Marsh is, think of that as the commercial brokerage arm. That's where I technically sit. We have Guy Carpenter, which is the reinsurance arm of that. Then we have Mercer, which is both a very large institutional investment consultant as well as a health and benefits consultant. And then lastly, we have Oliver Wyman, which is similar to like a McKinsey, like a large just business consulting firm that operates on a number of levels. Multinational, largest entity out there in this space, 130 plus countries, 90,000 plus employees. So it's big. It's in insurance, so it's kind of very much sits within that kind of TradFi ecosystem. And that's the world I've been living in for about 26 years.
Okay.
Yep.
So can you describe the largest categories for the insurance market, and then maybe into what the hottest or most growth-oriented segments would be? I know over lunch you mentioned data centers, AI data centers, I believe.
Right. Right. Yeah. I mean, basically, an insurance is part of what I always kind of call it's part of the financial lubrication out there in the system, right? That helps businesses grow and operate. Just like you need your credit lines and your banking relationships, you usually have to have some form of insurance to make the business operate. So within that context, anything and everything has to get insured in some form or fashion. I'll keep my comments really more focused from a Bitcoin Treasury perspective. And so in that world, the number one insurance product out there typically is Bitcoin Treasury companies are either, they're oftentimes existing public companies or they're private companies that are transitioning into the public company space. So within that, directors and officers insurance is probably the number one insurance consideration to work through. If you are publicly traded, that is kind of a table stakes policy that you have to have, both just as a good risk management tool, and it's also oftentimes necessary to attract new board members. It's kind of, they will expect you to have that when you're in the game.
And can you kind of just roll through what DNO Insurance is? Directors and officers, I believe, right?
Yes.
Okay.
Yes. Long and short, it's going to cover your executive decisions within the company for lawsuits by third parties. Typically, if you're in a public setting, it's your shareholders, for allegations of kind of mismanagement of the company. And the key operating word there is allegations, because oftentimes when you're a publicly traded company, you get alleged and sued for all sorts of things. Whether you're guilty or not, you still have to wrestle with it. You still have to settle with it. And those typically, once you're a public company, those are multi-million-dollar situations. Defense costs plus settlement amount. So they're not cheap.
Got it.
Yep.
And what have you seen in the Bitcoin Treasury space, call it 5 years ago versus today versus where this might be going? Yeah,
it's very fluid. Obviously, in the last 6 months, we've seen a real flourishing of the space. You roll back 5 years, there was like one company out there. And in my world, I started out as a DNO underwriter. So I was on the carrier side. And my job was to determine whether I was going to cover XYZ public company or financial institutions board for their DNO insurance. I now sit in the brokerage space where I'm basically the consultant that helps negotiate and help companies navigate that purchasing decision. The big topic I run into more often than not in the Bitcoin Treasury space when it comes to insurance, and if we stick with DNO for a second, is, it's a corporate governance layer to how you run your business. And oftentimes it takes that transition into the public space, has very different risk characteristics that need to be, you don't have to deal with them, but they're coming for you kind of either way as you're out there as a public company. When you look at kind of litigation trends against public companies, they're substantially higher than when you're a private company. So if you're an existing private company going in, doing an IPO, reverse merger, et cetera, your DNO exposure and which really is your chance of getting a shareholder lawsuit land on your door, rises significantly. So just some rough numbers, just to give the audience kind of some guidance and scale. So if you're a private company, the average kind of DNO settlement amount is somewhere between $500,000 and $1 million if you get hit. Once you go public, you're usually in the $5 million to $20 million range. So it goes up significantly. And then once you breach certain thresholds, so if you're above a couple $100 million in market cap, your risk goes up substantially as far as getting sued, because you have a deeper pocket, bigger target on your back from the plaintiff's bar. Then there's all these factors of traditional volatility metrics that are inherent in the Bitcoin Treasury space that you just can't avoid. So outside, if you just look at the aggregate market, some of the biggest drivers of shareholder lawsuits is stock price volatility, right? The other one is earnings misstatements. And then the third one often is just a fundamental misunderstanding of the business where a shareholder is confused or unhappy with how the earnings played out over time. So when you transition that into the Bitcoin Treasury space, it gets very interesting because, as we all know, as we track some of these treasury stocks, when I say the word volatile, that's usually in the insurance world kind of maybe a 10% stock price swing, which in the Bitcoin Treasury, like that's just an afternoon in our space, right?
Yeah.
So that is something that is a feature of the kind of the ecosystem, but it's a risk vector that increases your chance of getting sued in a DNO claim. Not good or bad, it's just something you need to be aware of and decide how you're going to deal with that. The other thing that I think, we spend a lot of time discussing this on X in the Bitcoin circles is, traditionally all the analyst communities, they focus on the income statement, right? So it's all earnings per share, which again does not translate to a Bitcoin Treasury company. And so you get these, oftentimes an EPS miss is a big driver of a DNO claim. And so as we've seen in some of these companies, like an earnings miss doesn't mean in the Bitcoin Treasury space what it means outside that space, because it's really about the balance sheet. But the vast majority of analysts out there from a stock analyst standpoint aren't quite there yet on understanding what that is. In Bitcoin Twitter, like we've got a pretty good ecosystem of people that do a lot of really good work in this space. But in the traditional sense, there's a lot of education that still needs to be done. The other thing I think is very interesting, and I'm a big fan of, but at the same time, it creates some additional risk vectors, is there's a clear shift in the Bitcoin Treasury space with strategy kind of leading the way of investor relations, right? How do you communicate with your investor base? And as any of us that have looked at the strategy earnings call, and I know Semler did something similar recently, they take a different tone and they're taking a very different path, which, again, is going from much more guarded and careful and scripted communication, which is kind of the traditional sense, to very open and risky in the sense of like having people ask live questions where it's not vetted prior to. That's really not done traditionally, right? But I think it's a really important part of where the space is going. I think it actually is better for shareholders to have that level of, as a shareholder myself in some of those companies, that's something I really appreciate. And I think we're in a shift of how that's going to look over the next 5-10 years. However, from an insurance standpoint, those changes and kind of structural shifts on how you manage investor relations, those create dislocation, confusion, and that oftentimes is where lawsuits emanate from. Because again, the lawsuit does not have to be valid. It just has to land on your doorstep, and you still got to hire the legal team. And in these days, to get a motion to dismiss of something that is inaccurate still can cost you $10 million. So it's not cheap. That kind of a cost of doing business out there if you're a public company.
Yeah. Wow. Yep. Okay. what are some of the most common questions that you find? Like, what are the themes of the conversations when you're starting out with a prospective client in the Bitcoin Treasuries space?
The one resounding question is, why does this cost so much? Right. I think like most things, insurance is a necessary part of the transaction, and oftentimes it is, it's not something people love to deal with. So it is oftentimes something that I'm approached at a little late in the process, particularly if you're like in an IPO scenario or reverse merger or an M&A situation. I tend to get brought in a little late to the game because nobody really wants to touch it, but they do have to kind of check that box and get it. And that's probably one of the things I try to work with companies on the most and just advocate here out in the space is being proactive versus reactive works to your advantage. And especially when your industry is new and has metrics that are like non-standard, you don't benefit by jamming stuff through at the last minute. It's not good for the carriers who have to try to understand your risk. It's not good for you because you usually don't get the best price. And I think one of the most important things is that education journey. So kind of going back to my early days, my first 10 years in the business, I was on the side of the table where I was the underwriter, and I would go to meetings, and I would usually be meeting with typically like the general counsel, controller, CFO level folks. And kind of similar to what Strategy recently did, where they brought a bunch of analysts on to ask questions out of the blue. That's what a DNO underwriter meeting is often like. It is very much like an analyst call. And the underwriters come and they submit their questions, but they also ask questions on the fly of, section 5.2 on page 82 of your 10K says X, add some color there. What does that look like? That process is, I think, really, really important for getting good DNO outcomes on the pricing and structure of your risk. And then it also really helps on the education side, because I think the insurance community, lack of information or the unknowns, they have to price for it. So if you are kind of cagey and you're going to take the kind of posturing of, I'm going to tell them as little as possible to try to like keep them, just give me the bare minimums, that it's understandable in some ways, but it doesn't really ever work out good for the company. So I'm very encouraging of get ahead of it, get a good partner, one who knows the public markets and who knows Bitcoin, because like there's a big difference between going down that road with a vendor, no different than your accountant or your lawyer, who does not understand why Bitcoin, right? They're just not gonna be able to represent you in the same way. And there's just a very strong need for that in all of these traditional vendor silos. So again, accounting, legal, insurance is the same way. So I'm a big fan of get ahead of it early, get a good partner, and get that narrative. And, frankly, take the same level of diligence and care in selecting your lawyer, your accountant, your banker, and your insurance broker as you do with like a chief investment officer position or head of Bitcoin strategy position. Like, it matters whether those vendors know the industry and if they can help you articulate to people who, for the most part, are going to lump a Bitcoin treasury company into the same bucket as an ETH treasury company, or the same bucket of, aren't you just like FTX? Like, I still get that kind of uninformed questioning quite a bit. So managing the narrative and creating a bit of a communication strategy around it of like, how do I translate the Bitcoin lingo into what an underwriter at an insurance company is going to interpret? Because I've been on both sides of those. And if you don't interpret it right, the message gets lost. And if there's confusion, you pay more at the end of the day. Fast forward, the other thing I am very big on, and again, I saw this firsthand on the inside on the insurance companies, is do not treat insurance like a commodity and a lowest price wins. Just get this done each year. I don't care who it's with. It's really, really important to build those underwriting relationships over time, because it's usually not a question of if you get sued as a public company, it's when. And insurance is one of those things where the contracts are typically They're all highly negotiated, so there's no off-the-shelf insurance product. It's not uncommon to have a 40-page kind of gut DNO policy with 40 to 60 endorsements on it, and you can have a 200-page legal document on your hand. So it's something that oftentimes what you think is covered is not exactly covered on the back end. A lot of what I think the value of what a good insurance broker can bring to the table is, one, helping you do the non-insurance risk management stuff on the front end. So whether it's government best practices, helping you negotiate your contracts from like indemnity clauses to make sure that, I always tell clients your contractual remedies should come before your insurance remedies. Insurance should be the backstop when the contract with like a large customer or vendor fails. So what can I do to help you get best in class indemnity language? Or maybe you're asked to carry an insurance policy that doesn't make sense for your business, and you're staring down a $250,000 premium for a product. I'm like, you don't even need this. You don't even have this exposure. Here's how you push back with that institutional client of why you're not going to buy it, why you don't need it, why the risk is mitigated because you don't have it, or you have an internal control that takes care of it. So there's a lot of kind of pre-buy stuff we can do from a kind of consultative standpoint. And then again, I have yet to see a D&O claim that's ever a black and white 100% covered. There's always somewhere in the middle. If you look at any kind of class action lawsuit, there's usually anywhere from, 5 to 10 different parties named, 5 to 10 different allegations. And what you'll often find is not all of those allegations or all of those parties are included in a D&O policy. So there's all this squishy gray area. Mm-hmm. And how much you get out of that gray is heavily, heavily dependent on having a good broker partner and having an existing long-term relationship with your carrier partner. So switching carriers every year just because they're the cheapest usually does not actually help you on the back end post-claim when it comes in. So just a lot of that of kind of coaching clients of like, if you're going to go down this road, which you have to as a public company, what does that look like? What are the things that I can help look over the horizon or around the corner for you and just kind of keep you out of trouble? Again, no different than your lawyer or accountant. Like, you want somebody who's got a good lay of the land, has the right kind of connections and relationships, and can kind of be the person looking out for you and saying, hey, you should probably think about this, and kind of covering your unknowns and bringing them to light and addressing them so that you don't have to.
Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Join us at the Win in Las Vegas, February 23rd through the 26th, 2026, for Bitcoin for Corporations. Use code KOTZ when you grab your tickets at strategy.com, and we'll see you there. When you said institutional client, is that an institutional investor? Or
it can be.
Okay.
It kind of depends on like what the treasury company's core business is going to be. So, like if you are let's just use a couple, like if you are Microstrategy, like your institutional clients are more capital allocators and money manager because you're selling, credit products through the kind of the Bitcoin pref stuff that they do. If you are an operating company, like a Semler, right? Like a Semler might have a large commercial contract with, a Johnson & Johnson, a Merck, or some kind of large corporate, and they will typically always have some kind of contractual agreement in there between those two entities. And insurance is always a piece of that contract that needs to be kind of thought through and addressed. And then the other one that is going to be very common will be any M&A activity. So like I know a number of the Bitcoin Treasury companies have kind of an M&A portion of their strategy. M&As are great, but they are highly, highly correlated with securities litigation. Because, there's a lot of disclosure of a private company or a non-public company. There's a lot of representations made of the quality of the company, the balance sheet, their risks and exposures. You can't disclose everything, even if you try. And there's always a little bit of Monday morning quarterback of like, nobody, no matter how much diligence you do, is going to know what you bought until you're 6-12 months down the road of incorporating that company into the mix. So you do the best you can. You use your advisors to help you knock out, mitigate, and kind of isolate as much of those risks as you can. But like, that's kind of what insurance is for. You have some unknowns. You just don't know what those unknowns are. So it's, that's what the insurance policy really is intended to be that backstop for.
Got it.
Yep.
Prior to 2020, was the business like picking up the phone and sometimes traveling versus is it different now?
Yeah, it's changing quickly. So I think COVID, in most of my background, so I've been, I don't live there now, but I spent most of my career on the West Coast between LA and San Francisco. So very heavy kind of tech experience, both on kind of like the private equity side and then just Silicon Valley tech risk. So in that world I'll call it pre-COVID, because I think that was really the big event. You had maybe like the tech firms in Silicon Valley had this like flex work mindset where it wasn't in the office every day, but it was flexible. But you still had to be basically live within a commuting distance of the office. COVID hit, and I think that kind of changed everything. I think it took this work-life balance kind of tech-forward shift of flexible work, and it kind of lit fire to it. And all of a sudden, we had to stay home, right? And we went fully remote. And, we're Zoom. I would say like the whole concept of doing a Zoom call, at least in the insurance industry, that was not what you did. You did a conference call and you did an in-face person-to-person meeting. That all changed with COVID, obviously, and we went 100% Zoom calls, both internal and external. And I think it was for a lot of us outside of insurance too, that was not necessarily the easiest transition. But once you get past the first couple months of doing it, you realize, okay, this is actually, there's pros and cons to both, right? Mm-hmm. I think there's pros and cons to both. What was really telling to me is most of my clients at the time were all San Francisco based, or heavy, heavy concentration. And most of my contacts, I would say 2/3 of them, as soon as COVID hit and it was remote, 2/3 of them left California. And they went back to either they're like, hey, it's cheaper in this state, or maybe they were from they had family in Philadelphia, and they decided they wanted to go live closer to family, stuff like that. So COVID, I think, kind of ripped the Band-Aid off of that, of remote work. And then I think they've tried to claw that back a little bit, but I think it's like, putting the genie back in the bottle. Like you can't really do it. And so what I've noticed, particularly in tech, and then I see in insurance too, there's this desire to kind of get back to in the office work. But there's an interesting kind of like, my personal view on this is that the really good people can say, if you want to keep me, I'm not coming back. Mm-hmm. Or if you want to hire me, I'm going to be fully remote. And so there's a bit of a premium of if you've got a little bit of experience and kind of value out there in the marketplace with what you do. I think most of those people, if you want to be remote, and I personally, I love being remote. So I've been virtual since about 2019. And I would never honestly join a company that required me to be in the office. I like going to the office for certain reasons, but I far like being remote. So again, kind of getting back into where things are shifting, I think in that same time, we have remote working going on. We have a real shift in the media space, right? And like, you're a perfect example of that, I don't think you could have done what you do now 5 years ago, right? And have the scale and kind of reach that you have. I think a lot of the podcasters out there in the Bitcoin space, same thing. So there's just a different dynamic. You don't have to go on Squawk Box or CNBC anymore to kind of get exposure. You can do stuff like we're doing right now. And what I find really fascinating is in many ways, the exposure is better. It's a little more high signal, right? Mm-hmm. And like case in point, you look at some of these, like the strategy earnings calls, the amount of people dialed in is whatever it is, like 50,000 plus, or the digital conference you did last month. I think at one point I'm looking, it was like 150,000, 200,000. You don't get those kind of numbers very often. And then for me personally, again, I've always been US based, but as soon as I started going on some of these podcasts and kind of doing that, the amount of international, connections that happen, that was really surprising to me, like fun and exciting and surprising at the same time. So I think we're just entering this world. And like, I think Bitcoin's kind of at the cutting edge of that, really, because it is a truly decentralized, non-sovereign money, right? So it used to be pre-Bitcoin, there were legitimate different rules of the road for somebody in Hong Kong, London, Netherlands, et cetera, than in the US. I think Bitcoin is starting to blur those lines quite a bit, and it creates that solid foundation where it's agnostic to where you are globally. And I think you see that play out just in like the companies I talked in the Bitcoin Treasury space, like pre-COVID and this, it used to be very much if you were a US based company, particularly if you're like in financial services, you were typically in New York, maybe Chicago, maybe San Francisco, but pretty much New York. And most of your employees were in New York, right? Mm-hmm. Maybe you had an office in London. These days, like the amount of Bitcoin Treasury companies where I'll meet them and I'm like, where are you actually located? Because I'm like, I don't even see an address on any of your content or website, et cetera. Super diversified, right? Where they may only have 20 employees and maybe only 2 of them live in the US, but it is technically a US, centered company. So that whole world, I think, is changing quite a bit. Again, the investment relations landscape is changing. So it's very fluid. And then in the backdrop of that, where I certainly sit, I'm definitely much more on the institutional side. Marsh being as big as they are, the amount, pretty much if you are a publicly traded company, if you're a top 10,000 global firm out there, somebody within Marsh McLennan, whether it's Marsh, Oliver Wyman, Guy Carpenter, or Mercer, has an institutional relationship with that firm, period. So that gives me kind of a line of sight of, I think I posted this last week, but I am just blown away by the amount of off the record stealth mode conversations with very, very large institutions that I'm having. And it's twofold. It is kind of the OG Bitcoiner space that's getting into financial services, or it's the traditional, very, very large financial services firm that's getting into Bitcoin. And you don't see that nearly as much in the non-Bitcoin digital asset space. There's bits and pieces of that, but when you see what the real big money is doing institutionally, it seems like it's 95, 99% Bitcoin, which is good to see. I mean, I kind of, as a Bitcoiner, I like that's validating. But we're also, we're getting into that season where I think it's going to get frothy as far as like digital assets on the whole. We'll start seeing some, interesting dynamics play out that, to me, it's just another opportunity to differentiate the Bitcoin Treasury thesis against everything else. Because I think in the long run, it makes a ton of sense once you understand it. But there's still a lot of noise out there within the larger digital asset space.
This episode is brought to you by Arch Lending, the premier provider of crypto-backed loans designed for both individual and institutional investors. At Arch, your digital assets work for you without selling them. Arch offers flexible loan options tailored to your needs. Backed by industry leaders like Morgan Creek Digital, Castle Island Ventures, and Galaxy Ventures, Arch Lending is setting a new standard in crypto-backed lending. Are you ready to unlock the potential of your crypto assets? Visit archlending.com to learn more and configure your loan today. Are you looking for comprehensive analytics on corporate Bitcoin adoption? Strategy Tracker delivers real-time insights into how companies are executing their Bitcoin strategies completely free. Monitor NAV premiums, cost basis performance, and track how corporate Bitcoin treasuries perform against the market. Upgrade to Premium for just $3.99 a month and unlock exclusive benefits like detailed market rankings, real-time trading volume analysis, and advanced performance metrics for corporations embracing Bitcoin. Apply code KOTZ at checkout for 100% off your first month of Premium. Strategy Tracker is your essential tool for measuring the effectiveness of corporate Bitcoin strategies. Visit strategytracker.com and gain the analytical edge in understanding the Bitcoin treasury phenomenon. Can we rewind and go to your Bitcoin journey?
Yeah.
Was there like a moment when you're like, or moments?
Yeah.
When you found it and that?
Yeah. My first, I think most of us, when we talk about how we got into Bitcoin, we always have that first instance where we hear about it and it doesn't click. So mine was, I forget the exact year, but it was somewhere in that 2012, 2014 window. I was working in San Francisco and I was doing mostly financial institution brokerage work, handling like custody insurance, cyber insurance, stuff like that. And I got invited down the street to this little firm called Coinbase that like no signage, like literally a blank door in a hallway, maybe 10 to 20 people, and kind of met the team. First heard about Bitcoin, totally didn't get it, didn't buy into it, didn't end up working on that account, but that was kind of my first touch point on Bitcoin. Didn't really think about it until 2018, 2019, and then 2020 is when I really kind of took note when Microstrategy first kind of made their move. Like that was very interesting to me to see a publicly traded company, because that's most of my clients are publicly traded, and that's kind of the world I pay close attention to see what they're doing. And then also I just happened to kind of be at that time of going down just the proverbial question of like, what is money, right? With all this COVID craziness, like what is going on with this stuff? So I definitely started kind of the what is money? Why is our system structured the way it is? And then like a very similar story too, I definitely got into the altcoins probably 2020, which for me, like this is not because I was smart. This was kind of dumb luck. But I fortunately enough, I knew enough to know that I didn't know the space that well. So I kind of told myself I'm going to take $2,000 and I'm going to play around with this stuff. That for me was enough. I kind of treated it like a little college education class. If I lost it all, it wouldn't hurt. And if I 10x'd it, great. But I was going to use that money to learn. So that was honestly some of the best money I ever spent. Because I lost any stuff I put in the altcoins. I basically lost. I got caught up in the Voyager bankruptcy on that. The only saving grace, and again, total dumb luck, is I was just learning about hardware wallets at that time. And I kid you not, like about a month before Voyager locked up, I decided to try a hardware wallet. And I only put my Bitcoin in there just because I just picked one. So thank God I did that. But that really was informative to me. And I think for the most part, like that is where my Bitcoin conviction lies. And then like on the personal side, the other thing I'm very passionate about is just, free speech, but also health freedom. So we've had some medical issues in our family over the years where we've seen firsthand, like just how dysfunctional our healthcare system is. And how many gatekeepers there are. And then, like we literally had some situations where some of the things our doctors were recommending, which were very well, these were doctors at very solid institutions, known names and hospitals. They were giving us certain recommendations on vaccines that didn't comply with the mandates. And so that was very eye-opening to us too, we started seeing kind of that censorship of the state where we'd be like, wait a second, our doctor who's a 25-year expert in a very rare condition that someone in our family had is telling us you shouldn't do this particular vaccine. Yet we had to comply right during COVID for some of that stuff. So that gives me a lot of conviction too, because I'm a dad. I got two girls, and so when you overlay that with what kind of future do I want to leave to them? Like I want a future that's not coercive, right? I want freedom of health, but I also want freedom of wealth, and that's to me where Bitcoin really clicked. And I'm passionate about for myself, but I'm in my late 40s, so like I'm really passionate about it of what it means for my children and future generations down the road, because the time element and the compounding of what Bitcoin can do, as we all know, it is compelling, right? And if I want to leave a world to my kids that is abundant and has hope and opportunity to it, you learn very quickly once you truly understand Bitcoin, like staying in fiat's not the way to do it. So that, to me, I'm like, some of the folks that know me out there are, for those that know Jeff Walton on the MSTR True North, like he and I, similar backgrounds in the sense of both right decisions. Jeff kind of chose to get out of insurance, right? And I chose to stay in insurance, mainly because for me, I thought that was the use of like my skill set there. The better use of it was to be a conduit and somebody, insurance isn't going away. Bitcoin Treasury companies and the Bitcoin ecosystem is going to need insurance. Insurance needs Bitcoin. Like that's a big passion of mine, is over the next 5-10 years is Bitcoin denominated insurance. And that's out there right now, but it is just a drop in the ocean of the insurance capital and capacity that's out there. But the use case of Bitcoin on an insurance company's balance sheet is significant, and it's exceptionally compelling. If you know where to kind of arbitrage those opportunities. And it's no different than the credit markets. It has the same kind of power, compounding effect, and the capital pools of insurance are substantial, right? And they're just starting to wake up to that. But there's a huge education divide. So that's, a lot of why I come on these podcasts is for that of how can I help be a partner? One, I want to bring the insurance community closer to Bitcoin to understand it, because I'm convinced once they do, it's frankly good for all of their bottom lines once they understand it. We have some regulatory friction points we still have to iron out. I think the current administration is doing a great job moving in the right direction. So we're making more progress in the last 6 months we've made in the last 6 years, but there's still a lot of ironing out and kind of work that needs to be done in that space. So to the extent I can help on that, And then frankly, I'm a big fan of these Bitcoin Treasury companies. So the more I can help them be efficient in their insurance transaction, keep their head above water, watch out for avoid the pitfalls to the extent they can. That's just going to drain capital out of the balance sheet that could otherwise be stacked in Bitcoin. Like, as a Bitcoiner and as somebody who's kind of saving for my kids and future generations, like that's a perfect use of my time and skills out here, intersecting between kind of TradFi and this growing Bitcoin ecosystem.
Working remote, how do you now think through clustering meetings when you're traveling, conferences, anything in that realm of when you're not at home?
Yeah, it just depends. So I think the conferences, I think one of the challenges in Bitcoin is there's literally a conference every other day that you could be at. And particularly for somebody like me who most of my, like going to a conference that's big with kind of, if you don't have C-suite executives at the conference, like for me personally, that's not a good use of my time from a Marsh standpoint. They can be fun and they're good for networking, but it's a mix mash. So I think there's certainly a growing ecosystem of more business focused Bitcoin conferences. So Strategies Conference, your digital conference you put on, and then the one you got coming next month. Those I think are all much more certainly like germane to kind of what institutional advisors, which is kind of the chair I sit in, will attend a lot more frequently, just because the conversations are different. It's not cheerleading Bitcoin or all the various use cases, but it's really educating. It's intersecting good kind of corporate risk management practices in a very fast growing, fast evolving subsect of the industry. And then like the other part, sometimes that's a fun and kind of rewarding part of what I get to do is because we handle everything, like we'll handle Wall Street banks. But I was on the phone earlier this week with a multinational NGO talking about the use of digital assets within their relief work in third world countries, right? So that's another area that I kind of get the privilege, frankly, to kind of be somebody that helps. Hey, if you need help with that, I can help you on insurance. But like more importantly, like why don't I, introduce you to folks over the Human Rights Foundation and stuff like that, or some of these folks that are doing really important work of how Bitcoin is for everyone, right? And in my world, I think what I'm always struck with is for those of us in the U.S., it's hardest for us to get Bitcoin because we're so privileged in so many ways financially. And Bitcoin is great for us, even those of us who do well. How much more powerful is it for refugees and people that, make $500 a year? Like, to me, that is, again, kind of where I got a day job that's kind of in corporate finance, but the passion of like doing really important work on the education journey. That's the part of the job I truly, truly love and enjoy, is intersecting, helping people with their risk stuff, but frankly, introducing them to thought leaders in the Bitcoin space that maybe have nothing to do with insurance, but help move Bitcoin adoption in whatever way, more into the light and just that education curve, which I think is, there's so many of us doing that work out there. And, whether you get paid for it or not is like irrelevant, right? Because it's like we all win when adoption increases, including those most unfortunate out there in the world. So it's important to me to kind of use, to the extent I can, those connecting dots within kind of, traditional finance to help those adoption curves along.
I'm excited that you were able to come into the studio. It's always very, very fun in person. Yep. Any closing thoughts? Where can people kind of reach out to you?
Yeah.
The firm?
Easiest way to get me, I'm at Garrett OJ on X, Garrett O Johnston on LinkedIn. That's the best way to reach out to me. And yeah, I mean, I love to advise and help out Bitcoin Treasury companies. It's a big part of what I do. It's a big part of my net worth is Bitcoin and Bitcoin Treasury companies. So I just love to build this space and want to do what I can to help adopt it.
It sounds like you're all in.
I'm in. I'm in.
You're in.
It's hard not to be once you truly, I think Mahler's mentioned this last week, those that truly understand Bitcoin, you can't not be all in because it's, what else are you going to do with your capital outside of that? Like not much else makes a whole lot of sense once you truly understand it. So I'm in. Yeah.
Awesome. Garrett,
Yep.
Thanks for the time.
Thanks for having me.